this meeting to order. The city governor. Okay, starting down the agenda, first to be an open forum.
Excuse me, Chair. I think we need to do a roll call. Oh, and yeah. Chair McCaskill,
Yes.
David Walker,
Present.
Will Lyon,
Yes.
Patrick Fader is not here, and John Wilton is not here. Vice Mayor Wilkinson,
Present.
Council Member Peter Mark. I believe he's joining online today. And then Robert Zadnick is here as the city manager, and myself, Helga Cotter, Director of Administrative Services.
Open forum. Is there anyone in the audience that would like to make any comments? Is there anyone online? Okay. We'll move on to the second item, which is to approve the minutes of our 2 meetings in April. Hopefully suggested or addition to we have in our packet. None. Can I have a motion on the second to approve?
I'll second.
Yes, Chair McCaskill,
Yes.
David Walker,
Aye.
and Will Lyon.
Aye.
That passes unanimously.
Real quick.
Okay, did you finish that roll call?
Yes, I
Oh,
did.
Great, thank you. Next item. Agenda item number 3, discussion and possible action regarding uncashed check policy. Helga?
Thank you, Chair McCaskill. This item is to review a proposed policy regarding uncashed checks. The new policy would be added to Part 2 Finance of the Administrative Policy Manual. Occasionally, the city has outstanding checks that remain unclaimed. State law permits uncashed checks that are more than 1 year old and under $15, or those greater than $15 and older than 3 years, to become the property of the city after they are published on the city's website or in a local newspaper. Staff are recommending that the city implement a formal policy for handling unclaimed funds that aligns with the requirements of the Governmental Accounting Standards Board, generally accepted accounting principles, and relevant government codes. This policy has been initiated due to 15 outstanding checks dated between 2019 and 21 that were still outstanding as of the end of June of 2024. In July and August of 24, we successfully contacted all but one of the payees to reissue these checks. The last outstanding check is dated June of 2020, which is the reason we are requesting implementation of this policy at this time. And I'm available for questions.
I'm just curious, does the ARC qualify as a local newspaper for purposes of this notice?
It does.
Good,
Yes.
they'll appreciate the business, I'm sure. Other questions or comments?
Just out of curiosity, do you use Positive Pay with the bank?
We do, yes.
Great. No other questions.
If there are no other questions, can I have a motion to approve the policy?
So move.
Seconded.
Are there any comments from the public? I should have asked, I suppose, but hopefully not. All right. Do we
Neither.
have a roll call?
No.
Helga?
Okay. The next item is the semi-annual review.
No, we have to have a
sorry.
roll call.
Sorry.
Mhm.
Chair McCaskill,
Yes.
David Walker,
Aye.
and Will Lyon,
Yes.
and that passes unanimously.
Okay. Yes, I'll go to the next item.
February of 24, the council approved a change to the city's investments, which involved transferring most of the city's fund balance from the local agency investment fund to CalTrust. As part of the updated investment policy, staff will provide investment information to the committee on a semi-annual basis. The CalTrust funds earned over $460,000 in interest last fiscal year and earned $124,000 in the first quarter of this fiscal year. In July of 24, with the approval of the Finance Committee Chair, the remaining $150,000 in LAIF was transferred to the CalTrust Short-Term Fund to take advantage of a slightly higher interest rate, but was moved to the Liquidity Fund in January of 25 to take advantage of an even slightly higher yield and a more stable net asset value. Vice Mayor Wilkinson, committee member Will Lyon, and I review the investments at the end of each quarter and recommend any changes to Chair McCaskill for his approval per the policy. As of the quarter ending September 30th, 2025, we recommend maintaining the current CalTrust allocation. Most of the city's fund balance is invested in the liquidity fund, which continues to provide the highest return and maintains a stable net asset value in these unpredictable times. However, if the Federal Reserve makes any changes in December or January, it may be necessary to adjust the allocations. And with that, I'd be happy to answer any questions.
Okay, questions from the committee? Seeing none, any comments from the public on this agenda item?
There's nothing online.
Hearing none, can I have a motion? The motion we need is simply to keep the current allocation.
Correct.
Correct. Okay, can I have a motion and a second, please?
I'll motion to keep the current allocation.
Second.
Roll call?
Pascal,
Yes.
David Walker,
Aye.
and Will Lyon.
Aye.
That passes unanimously.
Okay. Next item is item 5, a discussion and possible action regarding the fiscal year 24-25 year in review and proposed allocation of excess reserves. Helga?
Thank you. This next item is to review the fiscal year 24-25 financial report summary and focusing on the general fund and make a recommendation to the city council on the amount of unassigned reserves to allocate to one-time expenditures. I'll just give a brief overview of the fiscal year 24-25. General fund revenues were 10.98 million, which exceeded the budget revenues by 1.6 million. All revenue categories met or exceeded budget projections, with property taxes coming in at 382,000 above the anticipated amounts. The general fund expenditures totaled 6.41 million of the 7.02 million budgeted. Overages in certain departments were offset by underspending in other departments, and overall expenditures came in under budget by 616,000. Capital fund expenditures were 911,000. Many projects were still in progress and not yet started as of June 30th, 2025. Therefore, 1.08 million is being rolled over to fiscal year 25-26, which was approved with a budget amendment by council at their November 10th meeting. This is a typical method in Belvedere's budget process, as prior year project backlogs are cleared and the uncertain timing of implementing larger projects is accounted for. In summary, the higher than anticipated revenues, slightly lower than anticipated expenditures, and the lower than anticipated transfers out of the general fund combined to create a surplus of 878,000. The general fund balance as of June 30th, 2025 after accounting for all actual revenue, expenditures, and transfers is 7.4 million and exceeds the city's reserve policy by 3.07 million. As of June 30th, 2025, the city maintained approximately 1.38 million in excess reserves that could be appropriated and still maintain the 50% threshold over the 5-year forecast period. As part of the revised fund balance and reserve policy, the Finance Committee is being asked to recommend whether the proposed amount of the unassigned fund balance is appropriate for allocation for one-time specific purposes. Before you are the recommendations for the allocation of the 1.38 million while maintaining the general fund reserve ratio over the next 5 years. Budget outcomes can vary from what is forecast. Therefore, staff are requesting a $350,000 buffer of unassigned funds to remain in the general fund above the minimum threshold. This would leave 1.03 million in one-time funds available for allocation for several immediate operational and capital needs. The recommendations are first, an allocation of 830 for the Beach Road Stabilization Project, which is currently underway with design, engineering, and permitting work. Construction is expected to begin in June of 2026 and conclude by fall of 2026. When the fiscal year 25-26 budget was prepared, the project cost was estimated at 3.8 million. However, due to increases in construction and construction management costs, the projected estimate has risen to 4.4 million. The current budget includes 1.25 million in transfers from the general fund to the critical infrastructure fund over the next 2 fiscal years. With the proposed allocation of 830,000, this would eliminate the need for further transfers from the general fund, assuming there are no additional cost overruns. We are also proposing to allocate 50,000 for long-term capital planning assessments. This funding will allow us to combine the storm drain system assessment and the retaining wall assessments into single projects. By doing so, we can move these projects forward and gather the necessary information for capital planning purposes. Additionally, we propose allocating 50,000 for alterations and renovations to the police department. These improvements will help better align the department with current operational needs and enhance workflow efficiency. Finally, we recommend allocating 100,000 to the BCDC shoreline cleanup project. This project involves removing sections of an outdated retaining wall that have fallen into the bay on a city parcel known as the Strip. The Bay Conservation and Development Commission, or BCDC, has jurisdiction over the beachfront area and considers this unpermitted fill. They are mandating that the city clean up the site, and the project must be completed within the next few months to meet BCDC's deadlines. So in total, the proposed use of the 1.03 million aims to address critical infrastructure projects that are already in progress and meet operational needs and support priority community activities. And staff are available for questions.
Questions from the committee? I'll jump in with one real quick. The shoreline project requests an allocation of 100, even though the cost is estimated between 60 and 75. I assume if it comes in lower than the 100,000, that just rolls over to our excess next year that we can do something else with.
Correct, yes.
Okay. Questions?
This overall looks pretty good. I have a question on the math about the critical infrastructure reserve, just to see if I got this right. I believe at the end of the last fiscal year, it was 2.6 million. In the current fiscal year, budget has 550,000 going in. And this proposed allocation or recommended allocation would add another 830,000. So that would bring it to just a shade under 4 million, 3.98 if I add those three numbers. Then the current estimate you indicated is 4.4 million for the Beach Road project. And in the next fiscal year, the 26-27 budget, which I guess is a projection because we don't have a 26-27 budget. But in our 5-year projected budget, we allocated 1,310,000 to critical infrastructure. And at that time, we were projecting at the end of the 27 fiscal year, there'd be 305,000 left in it. And so if I take the 3.98 that would be generated by this recommendation and add the 1.3 for next fiscal year projection, I get 5.3 million. And then if I take out the 4.4 current estimate for the Beach Road project, I'm left with 900,000. So I think the only thing we're pulling out of the critical infrastructure fund at this time is Beach Road. Is that a true statement?
That's true.
So then, correct me if I've miscalculated anything here, but what it would tell me is that by the current budget and current recommendation and projection for next fiscal year, we would have 900,000 in the critical infrastructure fund instead of 305,000.
Numbers are a little different than yours.
And that doesn't surprise me.
So,
Let's go with yours.
so I can show you my breakdown. I have the 3.8 million that we're estimating currently, and then we're adding about 830,000 in additional costs, and that brings
I'm
it
sorry, the
to
3.8 are you talking about a expense or?
expense.
So 3.8 for the project currently?
3.8 plus
Yes, I've got that number
four,
actually.
one,
Yep.
3, about 830 in additional expenditures brings it to the 4.3 million.
Well, wait a minute. 3.8 plus 800 gets you to 4.6. I just found one error that I made. When I was looking at the 26-27 projection, the 1.3 is the out. It's 900 going in. So that's a $400,000 swing, which would make it 500,000 at the end of the 27 fiscal year instead of 300,000. Which in my mind is
A rounding error.
yeah, well, I mean, that's close enough. When it was gonna be 900 versus 300, I'm thinking that's 600,000. Why would we do that? But if it's 200,000.
So you are correct. So
What?
Yeah.
Are you saying
So, yes,
Scratch that from the minute.
yeah.
Okay, so
So
it looks
it
like
would
we
be
end up.
about 500,000 remaining.
Okay, so we
at
agree
the
on that
end.
500?
Yeah.
Okay, then that answers my question on that. Thank you.
We're just talking about fund balance for them.
Unbalanced the critical infrastructure, around 500,000.
Okay, other questions or comments from the committee?
just in relation to, oh, sorry, David, you go on if you've still got a
No,
question.
no, go ahead.
How do you correct that for the record somewhere? Or just when it goes to the city council, the numbers will be corrected?
When it goes to the city council, I'll have the corrected
Okay.
number.
Perfect. I had a couple of questions, but David, you go on if you've still got questions.
Well, mine could be anywhere in the meeting, Mr. Chairman. It's just, we have this police department allocation, and I just had a couple general questions about the police department
Go ahead.
funding.
Yep.
So we had we had a vacant position in city maintenance work area, and it was listed as vacant. And then we have a vacant position in the police department that's listed as deferred vacant, which maybe is just one's actively being pursued for a hire, which I believe was completed, and the other one's deferred at this point.
Right, so the public works position has been hired,
Right.
so that's no longer vacant.
Right.
I'll let Robert address the other one.
Yeah, the police department vacancy is a deferral.
Yes.
Yeah, until we can secure a source of funds that isn't just one-time funds, obviously is ongoing. I
Right.
think the idea is to wait until this next fiscal year as we start getting into the budget, start putting together our projection to see what's available. So those numbers might change. We also have the new fee schedule coming in place, and that's a little bit up in the air, just where that's going to land in
Yeah.
terms of new revenue.
I'm okay. That makes sense to me
Yeah.
to discuss it when we're looking at the budget, but just sort of to get ready for that and look forward. There was a comment about using the sheriff department for some coverage. There was also potentially recruiting reserve officers for filling vacations and illnesses. And then there was a Tiburon police deal.
Yeah.
We don't have to get into this too deeply, but are we doing any or all of those, or?
Yeah, I think the answer is some of those we're still looking into. We through a meet and confer process with the police union. We met with them, and they had a preference not to bring in the sheriff's department at this time, but to rather use their own staff to backfill any shifts that needed extra filling, or to use Tiburon or other agencies rather than bringing even though it's temporary, a full position over on a temporary basis to fill in for Belvedere. So we heard them, we said, okay, let's find a way to accommodate this. And, we're using other agencies to fill in as we bring this new hire on board to fill the one vacancy that was made by Tom Sabito leaving.
Yeah.
Yeah. And then, I'd say in parallel, also, we're working with Tiburon on a contract, a draft of a contract where between the hours of midnight and 6 a.m., they would come in on a trial basis and serve Belvedere during that 6-hour window in the evenings. And we more or less amend the Belvedere PD schedule to accommodate that. But that's still in progress. We're still working on the details with Tiburon and with the POA, the police union, on how that's going to shake out.
So this time Tiburon's not patrolling Belvedere.
They're picking up shifts, but it's still under an old agreement, kind of an informal agreement, joint aid between agencies. When they need help, we help them. When we need help, they come in and fill shifts as needed.
Thank you.
Yeah.
Can I just add to that as well that there's just so many moving parts right now in relation to what the fee schedule actually delivers. We're doing an assessment of all of our capital assets, and that might, reveal some things there. There's the PD discussion, and then there's the fire annexation as well. So there's so many things that it's impossible to lock anything in right now. And I think that's a discussion that will happen at the city council in terms of priorities, I would imagine, and then come to the finance committee for review. Does that sound right to you, Robert?
Correct. Yep.
Yeah.
I am curious, just in general, what are the alterations and renovations that are going to be done for 50,000?
Oh, good. Do you want to get into that?
Brief, one sentence.
So they're going to look at, in the one part of the PD, there was a spot where they used to have a secretary sit, and it's not really used for any purposes. So they're going to look at remodeling that space so that it's more useful, and then potentially do some upgrades to the kitchen they have in the bathroom.
Okay,
So-
sure. Okay, great. Other comments and questions about the allocations?
Yeah, Bob, I do, if you don't mind. Can you hear me?
Sorry. This is Peter Mark. He's on,
Yeah, sorry.
he's on
Oh,
Zoom,
hey,
and
Peter.
apologies, I brought him in as a panelist. So go ahead, Peter, whenever you're ready.
No, I'm sorry, I was a few minutes late. Thank you, Helga, for this. Just so I understand this, but I wanted to, I guess, draw attention to Table 9 of your reports, which breaks down the 1.3080 that gets allocated, less the $350,000 that you're talking about. This overage of our 50% policy, starts with the 3073 and then jumps down, back to the normal $1 million. Now, that's reflective mostly here by our continued conservatism, right?
Yeah, yes, it is.
I mean, because you're taking our revenues for what they are in actual in 24-25 and our expenditures for what they are in 24-25, then going back to what you budgeted for based on the old flow and not any sort of indication for where it might be based on the actuals of this year. And I know that's exceptionally conservative, but it has a long-term effect by not making more funds available for allocation now. Correct?
Yes, that's correct.
And that's institutional. That's what you're looking to do.
Right. We usually budget conservatively, and then
Okay.
when revenues come in higher than anticipated, that gives us the extra unassigned fund balance.
Okay. I think that's a bit conservative because you're being conservative on top of conservative, but I see what you're going with there. The second point I'd make real quick is the $50,000 for the police department improvements. To David's or to Bob's point early on, anything left over from the BCDC shore cleanup, put into the police department. Don't roll it back into the infrastructure fund because you'll need it in the police department. I've been down there. It's probably more than $50,000 worth of work.
Okay, we can make that change.
Helga, can I just jump in there a little bit there? Because, I mean, the overage this year was atypical. And we budget conservatively, and so normally we outperform, but the outperformance this year has been extraordinary, but that's largely due to one-off items, correct? I mean, my understanding, looking at Table 2, is that we had nearly $500,000 of fines, which we never budget for. And then on the property tax side, that was ERAF, which again is something that is an extraordinary amount for this year that we probably won't be seeing again at those levels. So it wouldn't make sense to take that new level as a baseline for revenues because these are extraordinary items. So that doesn't strike me as overly conservative, but am I missing something there?
No, you're correct. I mean, we did have 440,000 in fines that we collected, and those are one time. We don't budget for those. And then, construction permits came in 240,000 higher than budgeted, but the prior year in fiscal year 23-24, we had a decrease in building and planning revenues. So when we budgeted for 24-25, we budgeted a little lower because of that. But my understanding is building and planning had some larger projects, so therefore the fees came in higher in 24-25. Investment earnings, the move to CalTrust, we gained 173,000 more than budgeted. And then, like you mentioned, the ERAF, that came in 187,000 higher than we anticipated. So that's not something that we can really, forecast other than what, based on our history of, so, yeah.
So the piece to me where we're still being conservative is on the fee revenue, because this is the first year. And so we certainly could find ourselves overshooting and starting to establish structural surpluses, but we just don't know that yet because we were told not to budget for it.
Right. We were told not to budget in the first year for any additional revenue based on the new fee schedule that went into effect July 1st. And then when we look at the budget, then we can see what, how those fees are looking when we do the budget process.
Okay, thank you.
Helga, does the $446,000 of fines include the $300,000 that's coming back on appeal to the city council tomorrow morning?
No.
We haven't recognized any of that yet.
No,
Okay.
correct.
Okay, other questions from committee members?
I have just one for Robert, which is as Helga said, the 4.4 million estimate right now is still not final. Where are we in that budgeting process? Meaning, where's the potential delta on this?
Well, I mean, with any big capital projects, you don't know what your costs are going to be until you actually bid the project out and you receive the estimates in the proposals. So, overall, as we get closer to bidding the project, though, and a final design is narrowed down, then we get more accurate numbers, which I think is what's happening now. There's a couple of things that are causing inflations, like tariffs and other commodities that are really kind of throwing the budget off for this project. But there's other areas which we may consider where we could find savings if the numbers come in high. But overall, we're near completion of the project's final design, and we're expecting to bid the project out later in the winter. So Tony was just saying sometime around January, February. So we will know soon. I think we'll likely have numbers back when we start putting the budget together for this next fiscal year.
Any other questions or comments? Helga, I've got one unrelated to the allocation. And it has to do with pensions, of course. It's the area where I think you need a PhD in pension accounting to understand some of these issues. But if you look at page 2 of your summary, it shows that the CalPERS pension liability is 4.25, correct?
Correct.
But then when you go to the auditor's report on page 55, it shows it to be 3.156. Now that's based on the assumption of a discount rate of 6.9%, but I thought that's what CalPERS used also.
Yes, so the report or the number on page 2 is just based off of the valuation reports directly. And then what's in the audit report is the net pension liability, the 3.156 million. And that's based on a calculation that, excuse me, that the auditor does. And I'm sure Whitney can explain that more than I can, better than I can. So.
But okay. So anyway, you probably answered my question. It's not a typo. There's a reason why the numbers are disparate. I guess it's similar to the question you had asked Helga about some pension numbers. It's based on this mysterious calculation. Okay, all right. If there are no other comments or questions, are there any comments or questions from the public? Hearing none, can we have a motion, please, to approve the recommended allocation in the item number 5 report that we received?
So move.
Second?
Second.
Thank you. Can we have a roll call, please?
Chair McCaskill,
Yes.
David Walker,
Aye.
and Will Lyon,
Yes.
and that passes unanimously.
Great. Thank you, Helga. That brings us to our final agenda item of the day, which is the discussion and action regarding the draft audited financial statements.
So thank you. The final item is the review of the draft audit statements for fiscal year 24-25. The audit team and I have noted a few formatting issues, and we'll be making sure these are corrected before the item comes to council. Before I introduce the auditors, I am pleased to report that for the 4th year in a row, there are no findings or deficiencies of internal controls to report. With that, I'd like to introduce the auditor from Mays and Associates, who is joining us via Zoom. This is Whitney Crockett, audit partner, and who conducted the audit this year. And I will turn the presentation over to her.
Good afternoon, everyone. Can you hear me okay?
Yes.
Okay, great. Well, great to see all of you. I apologize for my sick voice. I'm recovering from a little bit of a cold, so if you can't understand anything, feel free to interrupt me at any time. But as Helga mentioned, my name is Whitney Crockett, and I'm an audit partner with Mays & Associates. And I oversaw the completion of the city's external independent audit for fiscal year ended June 30, 2025. The reports in your packet are near finalization, but we don't have our opinion date yet until everyone's looked everything over, which we anticipate will happen sometime this month. So as part of our audit, there are 4 different deliverables or reports that you have in your packet. So the first one is the annual comprehensive financial report, which I think is attachment 6.1. And then you've got the memorandum on internal control, which is item 6.2, the required communications, which is 6.3, and then the GAN appropriations limit agreed upon procedures report, which is item 6.4. So first, I just wanted to cover the results of the audit, starting with the annual comprehensive financial report, which is that first attachment. And if you look at that on page 1, of that attachment has our audit opinion. And I'm pleased to let you know that our audit opinion is unmodified, which is the highest level of assurance that we can give to the city. So if you read through that, that's basically what that opinion is saying. Behind that on page 5 of the report is management's discussion and analysis, which is prepared by management. And this gives you a financial performance overview of the city's financial activities for the fiscal year and gives you a more detailed look at the reason for changes and like highlights of the financial statements. So right now I'm going to cover some of the highlights, but I'm not going to go into everything in that management discussion and analysis. But so high level overview at June 30, 2025, the governmental activities net position for the city increased by about 2.62 million compared to June 30, 2024, bringing net position to about 17.8 million. And then at June 30, 2025, the city's governmental funds reported a combined fund balance of 14.59 million, which is about an increase of 2.87 million from the prior year. And it looks like just generally it's due to an increase in revenues and lower than anticipated expenditures. Current assets of the city increased by about 2.87 million, which is also attributable to total revenues exceeding program expenses in the fiscal year. And then also an increase in restricted investments due to a contribution of 0.3 million to the city's Section 115 trust and contributions of 1.2 million to the Critical Infrastructure Fund, along with 0.75 million in favorable investment earnings across all governmental funds. Liabilities related to long-term obligations decreased by about 0.26 million due to a slight reduction in the city's net pension liability and OPEB liability, and then also the outstanding bonds payable. But this decrease was partially offset by an increase in the compensated absences liability, which was the result of implementing Governmental Accounting Standards Board Statement 101 in fiscal year 2025, which essentially required the city to look at the compensated absences liability that's sitting on the books and make sure that it's including all accrued leave. So this GASB was kind of intended to make sure every governmental entity was recording those liabilities correctly. And I think the biggest impact to the city for changing that number due to the implementation was capturing in the sick time for any accrued sick time that is more likely or not to be used based on historical knowledge. So it did require city staff to look into the a liability calculation a little bit more and make sure everything's being included in that. So that's what kind of increased that. And then the slight decline in the CalPERS pension liability was mainly due to stronger investment returns, but then it was offset by non-investment losses for the pool during that measurement year. And then also any reductions in the OPEB and pension liability were also influenced by demographic changes within those retiree pools. So overall charges for services increased by about 0.92 million over the prior year, primarily due to an increase in building and planning activity, and an increase in one-time funds of 0.45 million for construction time limit fines received during the fiscal year. Overall property taxes increased by, let's see, about $500,000, a little more than $500,000. And then program expenses decreased by 0.4 million compared to the previous year. And that decline, it looks like, was due to reduced expenditures in both the planning and police departments. The planning department saw lower costs for outside consultants following approval of the city's housing element, while the police department underspent its budget due to ongoing staffing issues. But those savings were partially offset by higher fire service costs, which reflected a 7.5 increase in, reflecting that 7.5 increase in the annual contract, as well as increased public works expenditures driven by the use of outside vendors for staffing shortages. So that's the high-level overview of the financial statement numbers. I also did want to point out in the ACFR, if you look at page 37, which is one of the notes to the financial statements, on there is note 1Q, and that's where we disclose any new Governmental Accounting Standards Board statements. So if you read through that, you'll see that there were 2 new GASBs during fiscal year 25. So the first one I mentioned earlier was GASB 101, compensated absences, and that required the city to revisit the liability calculation for compensated absences to make sure that that liability captured everything. The impact of that was not material, so that's noted in there. Although the liability increased, it wasn't significant. And then GASB 102, certain risk disclosures, was also effective, but it had no impact to the city. But we must mention it there just to document that, it was looked at and it was technically effective during the year. And then attachment 6.2 is the city's memorandum on internal control. And in here is really just boilerplate language. What that memo is basically if we had any internal control findings during our audit, we would put them in that memo. So there are none to report to you. So everything in there is just standard language indicating that. But yeah, if we did have something, it would be in there. And it would be documented in there. Attachment 6.3 behind that is our required communications, which are basically required communications we must make to you related to our audit. And the only thing that I'd mention in that is the highlight of those new accounting standards, GASB 101, compensated absences, and then GASB 102, certain risk disclosures. So just highlighting the fact that those were effective during the fiscal year. However, they didn't have a material impact to the city. And then your last attachment in your packet is the GAN limit agreed upon procedures report. And this is a report where we basically recalculate the city's 2024-2025 appropriations limit. That was adopted by City Council, and we just recalculate to make sure that it was calculated accurately. And then we document what we did in that report, and there were no exceptions in our recalculating of that limit. So yeah, I just wanted to, I guess before I end things, I'd like to take a moment to thank Helga and her staff for being so helpful and responsive. Everything on our end went as smooth as could be, so we definitely appreciate that, just having things organized and ready for us so we can make sure to be as productive and efficient as possible, and everything went smooth. Any questions?
Questions from the committee? I don't think we have any. Questions from comments from the public? I don't think we have any.
None.
Shoot.
On the, thank you for the report and your review of it. On the memorandum of internal control, there's a paragraph that says in the schedule of other matters or recommendations not meeting the above definitions, we believe are opportunities for strengthening internal controls and operating efficiency. The only items I saw in there are the two GASB items, right?
Yes, correct.
So
We just
there-
put that there for that reason.
Yeah, so there, I mean, there really aren't any other recommendations. There's just these two GASBs which need to be done.
Correct.
And,
Yeah.
and they may improve things, but there's nothing outside of those two GASBs.
Yeah, it's just letting you know of the two that will be effective in fiscal year 26 and 27.
Right. And then with that clarification, this one GASB 103, you know, I don't pretend to follow it exactly, but it sort of looks significant. Is it, and what does it look like to you, Helga? And that's the current fiscal year. Are we on track with that?
I haven't looked at that in detail, but we will be on track for that.
Yeah.
So, yes.
Okay.
Yeah, I think for that GASB, they're just looking for people to make sure there's no boilerplate discussion in the MD&A, so it's more specific, you know, indicating why things changed, more context instead of this changed and this changed. I think that's the biggest thing. So if there
So
are
we may
instances
actually
that-
be almost there because that, it seems
Yeah.
like, it seems like we get that excellent analysis all the time.
Yeah, you have a very detailed MD&A.
Yeah. So then just one minor question on page 68. There's a category called use of money and property. And it was budgeted 198,000 and the actual was 718,000.
I can answer that.
Okay.
That's interest expense. I believe, Whitney, that's the auditor's term for that. It's kind of.
So it's investment,
Sorry?
Investment.
Investment, yes.
Yeah.
Yeah.
Okay, that's where it is.
Yeah.
Okay.
And
Thank
the 718 includes the section 115 interest that was earned as well. So,
That makes sense. Those numbers now make perfect sense.
Right.
Thank you.
Okay, I don't believe you have any other questions. Whitney,
I
thank
do.
you very much for
Whitney,
your
I-
presentation. Do you still need to meet with us?
You're welcome.
I think Bob, excuse me, Bob, Sally had a question.
Sorry, Sally.
Sorry, Whitney. Can you actually just walk us through the pension question that Bob raised earlier in terms of the difference between our CalPERS reported in our staff report today and the number reported in the financial statements?
Yeah, so now I'm not sure what was in the staff report mentioned today, what the number was, but
4.25.
okay, so does it say actuarial
That's-
liability?
That's CalPERS number. Yeah.
That 4.25 is a combination of all our plans from the valuation report that shows the unfunded accrued liability
For the CalPERS plans.
for CalPERS.
Okay, so yeah, so that's different from what the city has in the financial statements for the net pension liability, which is that let me just make sure, go to that page really quick.
3.156 million.
3.156 million. So the way that number in the financial report is calculated is basically taking these CalPERS reports that come out every year for the cost sharing plans across the board within the state. We use those and recalculate the city's liability based on them. So they come out with the total pension liability, and then they come out with the fiduciary net position. And then they give us these factors. So every plan in the state of California has its own allocation factor for the total pension liability and for the fiduciary net position. So we take those factors from those reports and apply it to these separate, what they call GASB 68 reports that have the actual total pension liability and the fiduciary net position. And we apply those factors against those for each the miscellaneous plan and the safety plan, because all the factors are different. And we apply those to get to recalculate the net pension liability. So it's different from what I think the unfunded liability is looking out at a different point of time. Whereas this, for purposes of the ACFR, we're looking at the measurement date of June 30, 2024, which is from the CalPERS actuarial evaluations at June 30, 2023. Rolled forward to 24. So it's kind of comparing two different numbers. So they're not going to necessarily match to each other because we're looking at the net pension liability and the ACFR, whereas you're looking at, in the valuation report, the unfunded liability. And I don't remember what time period was that unfunded liability to? Was it June 30, 2023?
June 30th, 2024.
Oh, okay. So that would also be part of any difference because you're looking at it a year
Earlier.
ahead. Whereas in the ACFR, the valuation report being used for rolling forward the liability is June 30, 2023's actuarial valuation. And then the measurement date is June 30, 2024. I know it's really weird, but that's just how it is.
So it's the year difference it's the different measurement date that is primarily explaining the gap here.
Yeah.
Okay, it's not to do with the deferred
Without-
inflows and outflows. They're reflected in both of the statements.
Well, the deferred outflows and inflows, I don't think they report those in the valuation reports from CalPERS. That's a separate, completely separate thing that has to be calculated, just for the ACFR reporting.
I don't think they do.
There may not be a simple answer to this question, but why does GASB require you to use a 6/20/23 instead of a more current 6/30/24?
Well, that, I don't know the answer to that, but I think it has to do with timing on when they can get that information out. So these measurement reports, so the measurement date for ACFRs at June 30, 25 are using that, measurement date of June 30, 2024, and those reports come out in 2025. So it takes them a few years to kind of get ahead, and those valuation reports are just the year prior to that. So June 30, 2023 used to drive that data. So I think it just has to do with timing on when they're able to get it out. And then GASB, the GASB requirement is that the measurement date be no more than 1 year prior to the fiscal year end date being reported on. So it's just a matter of, I think, availability of information. But I could be wrong. I'm not 100% on that, on the CalPERS history on that.
Helga, maybe you can just follow up with an email on that, because that still sounds very confusing to me.
I can, and I can share the worksheet with the committee.
Okay, that'd be great. And then Whitney, the only other question I had for you was in relation to the GAN limit. Could you calculate that for us as a city? My understanding is that lots of agencies don't calculate a GAN limit, even though in theory they should. I mean, in your experience of auditing other cities or agencies, is it, in your experience, is it pretty standard that people are producing their GAN limit calculation?
Yes.
Does that also apply to police districts and fire districts and others as well, special districts?
So special districts is where there's there's a little bit more on the side of not reporting it, or they don't engage us to review it. I'm trying to think of, I would say like 50-50 as far as my special district clients. I don't know about others within Mason Associates, but I would say 50% of mine report on, do the GAN limit calculation, and the others don't. And I don't know why. I'd have to look into that, but that's where the gray area is the special districts.
Yeah, okay, that's helpful. Thank you.
Yeah, no problem.
Okay, Helga, where are we? Wait, do we have to take any action on this?
Just a recommendation that we can bring the audited financial reports to council for approval.
Okay, then so we need a motion to do that?
Yes.
Okay.
Do we have to do closed session with the auditor or not?
Yes.
Okay.
So we need to
To
move
make-
that action before you leave.
Correct.
Okay, and maybe you could state the motion so someone can say I so move.
So the recommendation would be that the finance committee recommends that the city council approve and accept the fiscal year 24-25 audited financial statements.
Can I have that motion, please?
I'll make a motion.
In a second?
Second.
And a roll call.
Chair McCaskill,
Yes.
David Walker, and Will Lyon.
Yes.
That passes unanimously.
Okay. Our final action is to have a closed session with the auditors. Robert, can you just leave that? Well, I don't, you close off the public, although maybe if Peter's still there, he would want to stay.
Yeah, that is a good question. I think in this case, Peter might just be best to phone in. Yeah. So,
think the session with Whitney's going to be very quick. I don't think we have anything to report to her, but we probably need to go through that.
Okay. Hang on one second.
Is it